Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Thursday, the 15th of May, halfway through the month, 2025. We're at 6:05 p.m. Central Time, and I'm not rushed tonight, so not going to any events. I hated what I did. All right. Gold came off the 3,200 level, and the market's starting to act as though maybe the worst of the correction has run its course. On the energy markets, they got hit today. I'm not understanding when people are talking about, well, the U.S. and Iran might get along, might make a nuclear deal. That could work out. I don't know what it all means, and I don't know why the market was so worried about Iranian oil hitting the market or not. Iran's been selling all the oil they can make and get out there to China. I mean, where do you think it's going? And when the sanctions come off, yeah, they can get up another 1 million barrels a day over time. So that part would do it, all right? But does that affect the June futures? I don't think so. That's the point that I'm making. So I wanted you to be careful with that. I did a special report. It's the video report on the front page of my website. It's on natural gas. You're going to want to take a look at that. I won't discuss it tonight because it's in the special report. I cover not only the nat gas, I cover the ETF for it and the inverse ETF, KOLD, and I think you'll like what you're going to see with it. All righty. So what about news of the day? Well, today wasn't full of Trump, I can tell you that. We're going to get housing starts and building permit data tomorrow morning at 7:30. The starts are probably going to be up and the permits down. I don't know if you saw the housing index today. It's not good. And the builders are saying they're not getting the foot traffic that they were hoping to at this time of the year. The import-export price data is going to be released at 7:30. I'm looking for both sectors down. What we send, what we import, I'm looking for both down a fraction. University of Michigan Pre-Linn Consumer Sentiment Index comes out at 9. How could it not be better? I mean, it's May. We've seen that the tariffs went on, and now we saw that they went into a 90-day stall period. We're seeing a couple of deals get done. I would think that the market's going to look upon that as favorable. In terms of the Ukraine-Russia peace talks, the fact that Putin sent low-level people to it pretty well told me as soon as I saw that he's not serious about peace in any way, shape, or form. Zelensky's people had to go to it without Zelensky. Zelensky was there and prepared to go, and President Trump was prepared to go. Trump did come out and say, Putin's not ready to do anything till I talk to him. Mr. President, Putin's not ready to do anything. I think you're going to realize that it's going to take you, it's going to take the EU, the UK, everybody to unleash that massive amount of sanctions on him to see if you can get him to come to the table. I think sooner rather than later might be a smart move. Then you'll have something to talk to him about. I think that's the way to look at it, and any other way to me seems foolish, all right? Remember, you were going to solve that war the first day of office. That's what you ran on and said, right? All righty. So as we come to the market, silver up a little bit, copper getting a bounce tonight, and the platinum holding. Let's see what this all means. When we come to the chart action on a weekly basis, you've got lower highs and lower lows, and the market is now, as we're coming into the end of the week, towards rather the high part of where it's at. It's still down, but it's made back a chunk. It's only down 2.5%. You see that when you look at the daily chart, how the market came down, made a new low for the move, and didn't quite get to the 3,100 level. And I think you'd agree, since we've made the high of just over 3,500, you've come down there. So that's 400 points. I mean, that's a pretty good break. It's over 10%, and the market, I think, is trying to get its legs under it. When we look at the swing line study, we have lower highs and lower lows. To convince me that the market's attempting a bottom, it now has to get back over 32.70.40, which is about $20 away in round figures. Also, even if it does that, it's going to have a battle to fight if it keeps going at 32.96. So no, I am not saying I am bullish the market. I'm still in the bear camp until you take out that 32.70.40. But I looked at the market. I saw that it held the Bollinger Bands very well, the lower ones and the upper ones, as you could see. And when you look at the momentum in the chart, you got oversold and you're getting a bounce. So trend down, you can neutralize the trend. I think the professional money over the past 2 days came out against the Bollinger Band as it wasn't embedded. Had it been embedded, I wouldn't be saying that. Now we move over to the gold-silver ratio. You're still underneath the 18-day average, but I think you'd agree with me that what seems to be happening here is you're at least picking up where you need a bit more silver to get that ounce of gold, and we're seeing how the gold held. In the silver market, it doesn't get much more sideways than this. This market is caught between ultimately the 18-day average at this point and the combination of the 200-day average, this gray line, with the lower Bollinger Band. And you're just doing this in waves in the market. Even momentum is just caught sideways. So the longer this goes, the bigger the ultimate move out of the market. Think of this as a pipe, and price is a spring, and it's winding itself as it goes in here. As it comes out of there, it goes like that. That's what momentum's built on. Copper is the same story. Been going sideways. I think anyone that looks at copper has to be disappointed that the deal between the United States and China, where the tariffs went from 145% to, in China's case, 30%, you're not getting much going out of that. And you should have. I mean, it's still not 145. Is 30% rough? Well, here's what we saw when we looked at the producer price indexes. It got hit the worst in 5 years. So yes, the producers are eating a certain amount of this. There's only so much they can eat before their margins are gone. So that becomes the difficult part for the market. It's probably part of what's going on here. We haven't heard what's going on in positive in any manner since the initial talk of that. You know, yes, China's taken off a few more tariffs on the U.S. as they said they would, but we're not hearing how negotiations are going. And, you know, 30, 60, 90 days go by very fast. When we're looking at the platinum market, what the market did is it fell back to the 18-day average, the 100 and the 200, and it's holding it. The swing line is down, but you held these numbers. You never really entered a sell zone. You've never closed underneath the 18-day average, and momentum is held up to pointing higher. You could still be headed to the upper Bollinger Band. The dollar's in a very precarious position. You've had a rally. If the market takes out, not today, but the lows of Wednesday, right here, you could easily drop back to the 99.80 level. As you know, to me, this 9,800 zone is extremely important. If you close under that with verve, get this going, I hate to tell you, there could be another 5 to 10% decline in the dollar yet to come. Just getting under this doesn't set that up, but it does give you the market then with lower highs, lower lows potentially, and maybe getting to the 18-day average. The word is potential. I don't know where the highs and lows tomorrow are going to be, but I do know that if this market takes out the 99.10 level, it definitely has a problem. So you put it all together, you see what you can do. Now, as I told you, I did a special report on the natural gas, and what I covered in the natural gas were seasonal charts, both from the More Research and SeasonX. Next, I took a look at price counts, give you where they're showing this market could be headed. The seasonals, you're going to look at 5, 15, 25-year patterns in it, and I think you'll get an idea as to what I'm talking about and why I'm saying what I am. So it's all in natural gas, but it's not the natural gas alone. It's the ETF on natural gas. It's the inverse part of natural gas, the two times the inversion, and it's the futures markets. Go to iraepstein.com. You can click up here if you want to see it. You can go to our website, iraepstein.com. It stares you right in the face in the top left, or click this if you're watching this on YouTube. It'll take you to the bottom of this page that you're looking at then, and there'll be the link to give it a click. I'm Ira. You have yourself a great day, and I'll catch you in the other videos tonight and first thing in the morning. Take care.